The current market context is certainly a challenging one. Globally, we see rising rates, we see slowing economic growth, high inflation, and also declining earnings. So when we look at fundamentals, second quarter earnings season has concluded mid-August, and again, numbers were very strong. We saw revenue growth of 21% year over year and earnings growth of 13% year over year, with a large majority of companies beating estimates and surprising positively. Now, company guidance at the same time was rather on the cautious side given the environment, unsurprisingly. And as the markets were digesting that has definitely weighed on equity prices. But overall, despite a challenging backdrop, we see our company fundamentals in the portfolio remain very strong. We continue to have a portfolio that is made up of highly profitable companies with low debt levels on average and a strong growth profile. For instance, profit margin in the portfolio is 21% currently. The return on equity is 23%, and the 3-year average compound growth rate of earnings per share is 24%, while sales growth over a 3-year period on average has been 16%. So these are very strong numbers that we feel comfortable with, where we see the portfolio in the next leg up performing well. We've recently done an interesting analysis with respect to what's been driving the long-term return of our portfolio with respect to earnings growth and multiple expansion. And my colleague Pierre will dive deeper into this.
At the center of our investment approach is the belief that innovation will drive revenues and that revenues will drive earnings. And earnings are the main reason for price increase and the return for investors. Since inception of the strategy in 2017, the Singularity Index has delivered earnings growth in the tune of 19%, while the MSCI ACWI, the reference index, only delivered 9% earnings growth. What is interesting is that innovative companies in our portfolio managed to maintain their earnings level during the pandemic, and this is a strong sign of their resilience. So let's take a closer look. We wanted to perform an analysis that would show to what extent the performance of the MSCI ACWI and the Singularity Index were driven by PE expansion and contraction and by the earnings side of things. Multiple expansion means that PE increase, which means that you pay more for the same level of earnings. Multiple contraction on the other side means that you pay less. This means that if the market PE increase, either earnings are coming at a lower print or price are coming at a much higher level without earnings justifying those prices. What we see is over the long run, earnings growth is the main driver of the return. Obviously, over the short term, multiple expansion play a major role as well, and that is a leading indicator on what the market participants anticipate of what the earnings delivery will be from those companies. A good example of that is during the COVID crisis. In March 2020, you could see that suddenly the performance went down, solely driven by multiple compression. When government and central bank decided to support the market with whatever it takes measure, suddenly all market participants went to look beyond the COVID phase and the pandemic. This led to a sharp rebound that was also induced by multiple, and this time it was a multiple expansion that drove the return. The next phase of the return was the delivery on the actual earnings. During that phase, you could see that multiple expansion went down. So it was actually a multiple compression to the point where earnings became the primary reason for the performance of both the Singularity Index and the MSCI ACWI. In a nutshell, that means that current standing indicates that the Singularity Index come at a much cheaper level than its counterpart, the MSCI ACWI. We believe now is a unique opportunity to invest in a portfolio of innovative companies that come at a low valuation with superior earnings growth and superior return potential.
We're convinced that when it comes to understanding technological innovation, practitioners know best. And that's why throughout the year, we engage very actively with our experts who are all technology thought leaders, and they help us to understand where applied innovations are truly unfolding. And that helps us to separate the technological hype and misunderstandings from areas where applied innovations are really creating value in the marketplace. So far this year, we've added 5 new experts to the Singularity think tank, and they cover areas of new energy, environmental sustainability, robotics, and advanced materials in the areas of novel food, agricultural technology, and neuroscience. Dr. Matthias Erb, for example, is a professor in plant sciences, and he's the co-founder of urban gardening startup Boom. And he helps us to understand agricultural technology and the challenges in novel food value chains. Dr. Johannes Moyer is professor of sustainability at the Kuhn Logistics University, and he is a specialist in logistics and sustainability innovation. Dr. Thilo Hoon is professor of food composition and process design at the Zurich University of Applied Science, and he brings knowledge of microbiology and the digitization of food production systems. Dr. Nadia Khan is professor and neurosurgeon at the Children's Hospital in Zurich, and she's the founder of the Moya Moya Center, which specializes in treating rare pediatric brain disorders. Her expertise is in neuroscience and medical imaging, and she helps us understand state-of-the-art in brain science and human-machine interfaces. Dr. Jürgen Hoppmann is professor of management and sustainability at Oldenburg University, and he is an expert in energy and mobility technology and applications of new technologies in the energy transition. So far, we've gained some really interesting insights. In the area of augmented reality, we've analyzed the value chain of the display technologies that hold the key to unlocking natural vision in augmented reality and will be key for customer adoption. Together with Agnes Petit, we explored the pitfalls of carbon capture and storage in the cement industry. And in this link below, you will find an Insights article that we published on this topic recently. Coffee, please. But do I need to point?
Yes.